Leading South African food and beverage firm Pioneer Foods showed strong results for the year ended in September 2015. The company reported a 6% increase in revenue to about 18.8 billion rand for that period. And the operating profit increased by 28% to just over 2.1 billion rand. However, despite this very strong performance for most of 2015, its share price declined significantly in November. But to give us insights and the outlook for Pioneer Foods is Finweek contributor Moxima Gama, who joins us live from Cape Town. Moxima, Happy New Year to you. Good to see you again. Maybe just help us put Pioneer Foods into perspective. They've gone into a lot of restructuring strategies that we've seen. It included the unbundling of Quantum Foods. Has this worked?
Yes, it actually has. So effectively, the change came when Phil Roux became the CEO, which was around 2013. So he didn't really do an overhaul per se, but he did change or restructure some of the divisions that were less profitable for the business. So basically, just to cut costs and to at least weed off those low margin brands, which included the poultry business. One of them would also be the bakery manufacturing side. They also got rid of that. And at this point, the Pepsi brand is under consideration, which I think they'll probably can this year.
So you mentioned some of the areas that they've tried to cut the fat. Which areas have they beefed up, so to speak?
So they beefed up their bakery division, which is doing pretty well, which is ironically they were slapped with a fine for 45 million previously, but this division seems to be quite profitable for them, to the extent that they even wanting to invest more to upgrade. So they at this point going to invest at least 1.5 million into the Epping bakery, and I think they're also considering to put another 330 million into the Aeroton bakery in Gauteng. So I suppose it was looking at the entire division and identifying and highlighting and putting all the energies onto a division that's profitable. I mean, you can see the share price rising from that decision.
So we've obviously seen a very good performance in the first part of the year, but towards later on in the year, we did see that share price decline by around 20%. Why?
Well, remember, Pioneer Foods has come from a base of rather 19 rand, and it peaked at 216 last year. So that's quite a jump, and investors were bound to find it expensive and probably offload and put their investment somewhere else. So this I see as just a general correction. I mean, it's still quite a strong, solid company with good financials, but it's just a bit of a correction within the bull trend, and it looks like it could continue actually.
Outlook for 2016, are you looking at Pioneer as a buy?
Not yet. If you're considering to buy, probably hold off, because the level that was seen or that's seen on the charts would be that 142 level. If it happens to open below that level next month, then that would be a sign that we could see a bit more downside to at least the 105 mark. In this case, you really don't want to buy a stock that, you don't want to catch a falling knife, so you'd rather just stay out. If you are heavily invested, you probably want to get out. Remember, it is a correction, but it is a correction that could continue and make you lose some money, so you should rather just protect your profits and get out. So I think for the next, at least the first and second quarter, there could be more downside before any correction to start a completely new bull trend.
Moxima, thanks so much for that. That was Finweek contributor Moxima Gama. Up next, let's take a look at this week's cover story.